It can be risky entering into a repayment arrangement if you're not able to comply with the terms of the arrangement that the company agrees to. It's important to only enter into repayment arrangements if you have a real and genuine belief that the company will be able to comply with the terms of the obligations it's assumed and come out the other side as a fully compliant taxpayer. Otherwise, the consequences for the director of breaching the repayment arrangement and ending up in liquidation can be serious. Hi everyone, Liam Bailey here from O'Brien Palmer, and today I wanted to talk about ATO and entering into repayment arrangements. This is an important topic because relations with the ATO is one of the most determinative factors of companies' insolvency in Australia at the moment. ATO is a significant creditor in almost all forms of external administration. They're actually a creditor in close to 99% of all businesses that enter into small business restructures, and they're the majority creditor. That is more than 50% of the total money owed in 91% of all companies that enter into small business restructures. So the company's relationship with an ATO cannot be understated in its importance. During COVID, the ATO is generally accepted to be Australia's largest bank, having provided financial assistance to a massive number of companies and taxpayers. In the wake of COVID, the repayment of monies owed to the tax office has become an incredibly significant issue. That's not to say that it hasn't always been a very significant issue with companies facing insolvency. It is very common when companies are facing cash flow difficulties for directors to ask their accountants to approach the ATO to enter into repayment arrangements. But it's really important that we understand exactly what a repayment arrangement is and what the legal consequences of entry into a repayment arrangement are. Historically, we've seen the ATO's attitude towards accepting repayment arrangements as being determined by both internal and external factors of the company. The company's history with its compliance and the amount of its debt is highly determinative, but so are external factors such as economic conditions and government policy. That is to say that sometimes the ATO is very generous in the terms that it will accept in a repayment arrangement, and other times obtaining repayment arrangements is practically impossible. So what is an ATO repayment arrangement? A repayment arrangement with the ATO is an agreement between the company and the tax office of the terms upon which a company can repay its debt to the ATO that it can't afford to pay as and when they fall due and payable. Some key features of an ATO repayment arrangement are flexible payment terms. The ATO can tailor the repayment plan based on the taxpayer's financial situation, allowing for manageable instalment amounts. Eligibility. Taxpayers need to demonstrate genuine financial hardship and typically need to be up to date with their tax reporting obligations to qualify for an arrangement. The duration. The length of the repayment arrangement can vary, usually depending on the size of the debt and the taxpayer's ability to pay. And arrangements in relation to interest and penalties. Under a repayment arrangement, interest may still accrue on the unpaid balance and penalties may be applied for late payments, but in other cases these can be negotiated. So what are some of the critical issues about entering into repayment arrangements? First and most importantly, it is essential that directors understand that entry into a repayment arrangement does not change the date on which companies' tax debts are actually due and payable. Instead, a repayment arrangement is effectively an agreement of forbearance. That is to say, it is an agreement that the ATO will not commence enforcement activity for the debts owed to it. It doesn't change the fact that the debts are still due and payable. Why is this important? Entry into a repayment arrangement with the ATO is effectively an admission that a company is or may well be insolvent. It is an admission that the company cannot pay its tax debts as and when they've become due and payable. It is a recognition of this fact by the director, and it is a recognition of this fact by the ATO as well. It's also worth noting that a repayment arrangement is a commitment by the company to pay all of the tax debt owing, and this can include both interest and penalties. Generally speaking, the ATO might be willing to discuss waiving penalties and interest in certain circumstances, but it's really important to understand that the only way to obtain debt relief for tax liabilities is through a form of formal administration, such as voluntary administration or the small business restructuring process. You might want to have a look below for links to our videos about the small business restructuring process or the voluntary administration regime. So if a company enters into a form of external administration after having entered into a repayment arrangement, the date on which the company entered into the repayment arrangement is often determinative as to the date that the company became insolvent. The date that the company became insolvent is not only relevant to deciding the outcome of the future of the company, but it also has personal consequences for the director's personal liabilities. Directors may not be aware, But any payment made to the tax office under a repayment arrangement within the 6 months prior to the company going into liquidation are generally considered to be preferential payments. That is, it's a payment where one creditor of the company has received more benefit than the general pool of creditors. Such payments are voidable against the liquidator and recoverable as preferential payments. In circumstances where the ATO is required to disgorge payments it's received under a payment arrangement as being preferential, the Taxation Administration Act has the ability to make directors personally liable to refund that money to the ATO from their personal finances. Therefore, if you enter into a repayment arrangement and then go into liquidation, the monies that you've paid to the ATO in the period prior to entering liquidation can be recovered by the liquidator and then recovered by the ATO from you personally. We've also seen lately that the ATO has been issuing director penalty notices where companies breach their obligations under the repayment arrangements they've entered into. The effect of this is to provide a personal guarantee to the ATO for the company's performance under the repayment arrangement. If the company then falters, the director is personally liable to the ATO for the amounts that they have not collected. So all in all, it can be risky entering into a repayment arrangement if you're not able to comply with the terms of the arrangement that the company agrees to. It's important to only enter into repayment arrangements if you have a real and genuine belief that the company will be able to comply with the terms of the obligations it's assumed and come out the other side as a fully compliant taxpayer. Otherwise, the consequences for the director of breaching the repayment arrangement and ending up in liquidation can be serious. As I previously noted, directors have made an admission that their company is insolvent and become personally liable for the debts incurred after that admission, the company's obligations to the tax office, and can become personally liable if the ATO is required to disgorge monies received to the liquidator as preferential payments. Once again, working with your accountant to ensure that the entry into a repayment arrangement is right for you and your company cannot be understated. There are a host of other options available to directors whose companies are facing financial difficulty. And if this is you, you should talk to your accountant or get in contact with us at O'Brien Palmer today to discuss those options. We're always happy to have a chat with any directors on a fee, no obligation basis about all the options available and which is right for your company. Hi everyone, Liam Bailey here from I don't even know my own name. But that's not to say that it wasn't so that's not to say that it wasn't also highly important. That's ridiculous. You threw me on that.
Sorry.
That's okay, just because it popped up on the screen.
Sorry.
And then...
and then looked down. No,
What are you doing now?
I'm just pressing because I like to see it. Just ignore me. I think that was enough.
Yeah, cool. I am good with that too.